So let's get the read from Oxbow Advisors Managing Partner, Ted Oakley. Obviously, we'll get weak first quarter numbers, even if it were to end today or weaker than expected. But what is the longer term fallout, do you think? And does it enter into your strategy?
Well, for us, and I think you know this, Neil, we are looking for a weaker economy anyway in 2019. But what happens is the disconnect between economists in Washington and Wall Street to Main Street is that they don't realize what happens in an average person that is going around out there. And if you've seen so many of these agencies that have to make approvals and issue checks and do all that sort of thing, it has nothing to do with the 800,000. It has to do with what you trickle down in the economy. And so our idea is it will probably affect it more than they think it will.
All right. Now, we already have taken off the table for the time being, and this could change, that the Federal Reserve was not inclined to hike interest rates in this environment. I believe you were in that camp even before the shutdown. But now what? I mean, some worry that this could just push weak numbers into negative numbers. Are you?
Well, the last time we spoke, I mentioned to you that we thought there was a decent chance you would get a recession in the last half of the year. And what it happens is it sets you up for this thing, sort of a domino effect.
Right,
you go from more and more and more. It's hard to turn around a big machine like this. And I think that's what a lot of people fail to realize when they're sort of playing these games, that it's a delicate mix here.
So let's talk a little bit about what's happening on the earnings front. I think we're about maybe a fifth through this process here with the S&P 500 companies reporting. And most have come out better than their already ratcheted down estimates, so there was a low bar for them. Their guidance, by and large, a little bit more positive than people thought, IBM included. Is it your sense that earnings, in other words, and those forecasts, more to the point, ultimately save the day?
I don't think so for 2019. If you looked at the fourth quarter, they were expecting in October to have 12% increases in 2019. I think that's probably down to around 6 or 7% right now. And that could actually go lower because typically people that are doing these forecasts, first of all, it's hard to do. And secondly, they don't factor in these slowdowns. And so as you get slower, and I think that's what we'll do eventually, I think they'll ratchet those down. And you don't have the effect of the tax deal that came out last year.
Is the bang for the buck from that gone? I find that a little hard to believe, but a lot of people are telling me, very smart people, that it was a one-off and it's done.
Well, you have to think about how it's set up. The bang for the buck came at one time.
Right.
So when you're doing comparisons, it's already there. So when you're doing
year over year, when you're like-minded numbers, like-minded tax rates, and now it's harder to see that. I see.
Yeah, it's harder to get. It's harder to get the move after that because you're already in it, and that's where we are at this point.
Ted, thank you very much. Good seeing you again.